Hey everyone, and welcome back to another video. In today's video, we're discussing everything to do with the markets across the world right now, including our thoughts on the S&P 500, Nasdaq head and shoulders breakout, crypto markets, gold, US oil, Tesla, and more. It's been highly volatile 24 hours, in fact last week, and we've now seen the VIX or the fear index spike above 30. What does this time of year tell us about the potential of a Santa Claus rally, and will we even get one? Stay tuned to find out more, because a lot of people are starting to freak out. See you soon, guys. Alright everyone, and this begins our market recap for the markets closed 1st of December 2021, and it is another red day. We had a rally in the morning during the hour of power for retail, and then it went straight into a red, sold back down, and it seems to be a reoccurring event where we're seeing the futures market going green, the market initially opening green, and then having the sell-off. So be very careful about this. Remember, what Wall Street's telling us is every single night they've been selling off, and they've been doing this pretty consistently. The fake market futures to bring us into highs, everyone's getting excited. It's not breaching key levels we'll be taking a look at soon, and then it's selling off. CRM, Salesforce, had a pretty bad earnings result, and that fell off even further, 11.74. Some of the normal stocks that we look at, things like Tesla, fell off after initial opening green in the morning, and really not much was safe. A little bit of the healthcare sector was doing okay, and it was more a flight to defensives. So let's have a look at each one of the indices first, and you'll notice again rallies in the morning. IWM actually rallied pretty hard in the morning, 2.5% up at one point there. And then every single index fell off, IWM included, and ended up being the worst performer for the day. Huge volatility in these smaller stocks, and it's all the way back down to a really key support now. But we just still haven't seen a turnaround since that initial, what is now going to be called, of course, false breakout a few weeks ago. We have the S&P 500 1.18%, Dow Jones down 1.34%, and Nasdaq 1.6%. Nothing really that good there. When we have a look at the sectors, the defensives were out to play. XLU, XLV, XLP. These are the three defensive sectors. And if you're not familiar with them, you'll have to obviously look into the utilities, healthcare, and consumer staples. They tend to find strength when Wall Street's rotating out of the other stocks. And what was really leading the charge again was XLC. This communications index or sector has really been getting absolutely slammed now for quite a few weeks. It's been one of the worst sectors, and I think it actually poses a potential in the future to go back and have a look at it, but not right yet. We haven't seen the worst of it maybe at this stage. We'll be trying to answer that. The VIX is spiking, and it is spiking hard. This is pretty much the highest number we've had through 2021. Why I say that is because while we were higher in February, you've got to remember at that point we were rolling down here off those incredible high VIX points from 2020. This thing has just gone off a base of 15, which we do like to buy down here. It's gone through 20, which we knew was very, very big. It's hit the resistance here at 28. It's come back down and then just gone bullish, ballistic. And we're starting to get to this point between this 32 and 36 where you couldn't really see much more upside in the VIX. The volatility tends to spike when the algorithms get involved in the market. Obviously, it's got to do with options in terms of volatility. That's what it's based on for the S&P 500. But when this happens, remember, it's all about key supports. And we'll be taking a look at the most important key support throughout today's video, because this one really dictates whether we should be scared in this market and expect further weakness, or whether this is just a healthy correction before a Santa rally. It's not unknown that around this time of year, we sometimes get a double dip. So we get that dip. We've spoken about it before. We've spoken about this idea that investors really shouldn't panic until under a certain level. And then even then, you shouldn't panic until you really get under the second level as well. But this VIX is high, and it's certainly spiking. Now, everyone's talking about inflation, this, inflation, that. You'll notice every second article in the media is going on about inflation. And look, we've talked about this. This is the story of 2021. Whenever they sell off, they use inflation as a reason. So we have to find out, is this in our control? Is this something we should be scared about? So I've argued many times on this channel, together with the community, that really one of the biggest stories I think of 2021 was Evergrande. That thing is real. That thing is very scary. And while I do believe that it's actually being fixed at this stage because of the things that we've seen play out, that's one of those ones that could become incredibly systemic. When we're talking about inflation, sure, it's a concern. And of course, that's something that we all need to be worried about to a degree. But I've argued many times it's not as bad as people expect. And while the Fed's now taken out the word transitory, they're admitting to it, the US 10-year is actually coming down. So this has broken through the massive trend line, and the US 10-year yield is actually declining. At the same time, there is a flight to defensives right now, and you can tell that by the TLT. This is the 20-year Treasury bond. This bond is right up at resistance, and it's hit this time quite a few points. 1, 2, 3, 4, and this is actually a fifth touch coming off a double bottom. Bonds are flying, and this is really showing you where the money is probably floating into. There's a little bit going into the DXY, the US dollar, in recent weeks. That's considered a bit of a defensive. In some ways, the crypto market's holding up amazingly as well. Gold's obviously flatlining around a zone we'll look at in just a second. But this TLT, the bond index, let's go to a weekly chart just to put how important this closure could be in perspective. We haven't had a closure ever for a long time here above 151. We just have not seen that. We're right here coming into the jobs number. And this jobs number, being the non-farm payrolls coming out on Friday, 8:30 a.m. in New York, is going to be what so many people are looking at. The bonds are going to fluctuate. We expect them to kind of hover around this price, maybe go slightly through it. And this will probably lead on to whether we're going to get a Christmas rally or not, the way that the market interprets that. So many critical points right ahead of the jobs number. I think a lot comes down to this number. What do you guys think in the comments section below? Do you think it matters, or is this just a normal move that they're just doing for no apparent reason? Remember, we've got this Omicron discussion, we've got the inflation, we've got interest rate hikes. Bloomberg, if you had the Bloomberg terminal, obviously they're expensive to have, but you would have noticed a few weeks ago, they were actually pricing in 2 to 3 interest rate hikes for 2022. So I've said several times here on the channel, we've talked about the idea that interest rates were going to become a discussion of 2022. It still will be, but this bond movement here, a breakout from up here, exposes the 155. We get through 155, well, we could be free flowing in the bonds. And we know if bonds go nuts, this is the big money. This is what happened during, of course, the crash of 2020. Bonds went hyperactive as people fled into defensives, and they started running a little bit before that. So let's find out whether we breach this zone. Something to watch for a lot of traders and investors out there. Let's move over to gold. So gold continues to flounder around this same point. Every rally seems to be stopped by sellers. We can tell this by all these wicks. We've got long leg doji, obviously another long leg doji, rejection candle off the 1810. It's broken through this trend line down. And while we are in a month, we've now started December. We're in the month of seasonality in the last 4 years, where we've seen that turnaround right on pretty much the start of December. We saw that turnaround low into bullishness. This is only seasonality. We ultimately need the price action to agree with us, and it certainly has not at this stage. The difference between using stats and TA is a huge deal. If you went through and used every stat in the market and you didn't see correct technical analysis and correct rotation, all those things coming into it, then you just can't really bring 2 and 2 together to give you that confidence. But at this stage, look, if we got to close above 1810, what would we be doing? We'd be getting through the daily 200, the 50 exponential, the 20 exponential, and snapping off all these shorting wicks. That would be a huge deal. It hasn't happened yet. At this stage, if I looked at this market, I'd be looking more bearish towards bullish, but I'm not going to necessarily trade it unless it snaps a new low, because at that point, yes, I mean, look at the story is compelling towards the short. Right now, it could be a false breakout. There's a lot of manipulation going on in the silver and the gold charts, and you've got to be careful. And that's why we are being careful here when we're basically neutralized with the idea that if it does break out up, we're very, very happy. If it breaks down, I'm sure many day traders, scalpers will get involved in that market. Let's move over to US oil. So US oil, OPEC, all of these types of things occurring at the moment. We do need to be careful about that bit of news. We'll just quickly go over to the calendar. Remember, Thursday, December 2nd, all day OPEC meetings. A little bit scary for US oil traders. You'll notice the base is now formed again. We've got a new base in our green zone. If you look over on the left-hand side on your own charts, you will see why we're focusing in on this area. And if it does end up breaching back up, so let's say OPEC do something, maybe they restrict more barrels, they talk about that action, we could see a double bottoming effect here in the beginning of recovery. So we will be following oil heavily over the next 48 hours once we get clearer signals. It's in our green zone. We like this level from a longer term time frame, but we haven't seen the turnaround just yet. And the turnaround is key to not making poor decisions. Remember, if you're an investor, you're just buying levels and then, of course, holding them, believing in that longer term approach. If you're a trader, you need to see the momentum follow through. Very important. And we've had a couple of big examples of that being gold and the Russell 2000 recently. Let's move over to Tesla. So we were speculating on the idea that that little closure out on the previous close was pretty bullish. It did open up. It certainly opened up. It even started rallying. Then it creates a nasty long leg doji, goes bearish, closes below, and the rest was history. A massive trap here from Wall Street. If you'd closed it early, well done. If you'd broken even your trade, well, of course, you got broken even. But if you were looking for that 1200, it just did not happen. And now we start to talk about the 1063 previous support area, or the 1000 for Tesla. Could these be the zones that we end up getting down to? It's pretty whitewashy. Look, the problem with trading a chart like this is you know that it's already had its big move. Look, we followed Tesla strongly from especially this area here when we recognized this trend line being so great, and of course this previous price action, and we really felt like it was going to go ballistic. It went ballistic and it was great time. But we also know that when stocks go ballistic, they do tend, especially Tesla, we've detailed on the left-hand side so many times, it goes ballistic, it goes sideways for a while, then it breaks out and goes ballistic again. It has that nice ramping effect. We've had the ramp, we knew it would be trapped for a little while here, or we suspected as much, and we're still in that kind of trading. So day traders are coming out. You need to really get into your 15-minute charts, 1-hour charts, and keep your finger on the pulse. If you're wanting to trade Tesla right now, it's not for swing traders. It's for people that are really fast and making quick decisions based on the charts. And I think a lot of you guys have been talking about that in the rooms and are very aware of that right now. Now, Amazon was more of a seasonal play. We've obviously seen Cyber Monday come through. It hit the resistance. It was a nice breakout. We're now back down in this kind of zone here. And it's not looking as good as it did a few days ago. Now, it's still holding up relatively well in comparison to the rest of the market, considering it had ramped up there. But we're not really happy about what's going on here. It keeps rallying and then selling off. We're back to a very important zone. We've got that long over here that we've got for the trend line. Then we have those previous peaks that are coming through. Let me just quickly check this for a second. Yep, no, I'm not logarithmic. That's okay. And we want this to pretty much hold around this zone. We do not want it much further down. We've got the 4-hour 200. Let's have a look here at the daily. So the daily 200 is just underneath that. We need it to hold in this area. No more than this, okay? We don't want it underneath here because that would be pretty detrimental to the market. And we'll talk about the Nasdaq, and we'll talk about, of course, the S&P 500 very soon, because this stock's going to be really dictated to by those indices more than anything else. When the VIX goes above 20, guys, you've got to be fast and nimble. Scalping, day trading, swing trading stops, investing becomes key levels that you're looking for. At least that's our belief here in the community. We had a great feedback yesterday. I read all of your comments. It seemed like everyone agreed with that concept, which is great because a lot of people were saying they got smashed when they were trying to swing trade when the VIX was above 20. They never knew why. And now they realize it's because the markets are moving too quickly. You can't use the technical analysis of a normal technical market. You've got to be in the 1 hours, in the 15 minutes, or making decisions based on a longer time frame approach. Let's now discuss IWM. I know a lot of people are very disappointed with this index. I don't blame them. The rallies have been very big, and then of course the dumps have been horrible as well. So we had that breakout previously in November. The beginning of November looked great. We certainly made a big deal about it here on the channel, and we talked about the idea of it maybe even going 10%. We knew that it probably moved too quickly and it was coming back down to this green zone. Most likely it was going to be the key level. We almost got a breach out and then it didn't do it. So here is the 2-hour 20 moving average. And I wanted to bring it up because again, it has respected this zone in the last 24 hours of trade and sold off. So the 2-hour 20 becomes a huge point of interest for buyers. We're back on a key level of higher time frame support. We'll look at it in a minute. We've sold this 2-hour 20. You really need turnaround stories. We haven't had them. We suspected we'd get a rally in the previous session. We did, but it was all in the futures. Everything was in the futures. The futures just went boom, 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 opened up here, went a little bit higher and then sold off, which is really frustrating. So the previous trend line, which we had here, became resistance. At the same time, the 2-hour 20 was there. It's actually not a bad place for people to try shorting, but I want to show you the range of how much this market moved. So we're talking about from top to bottom, it actually went down 5% on the index. That is a big deal. It's a huge move. And I'm not thinking that this is like a terrible index. I mean, this is the Russell 2000. But when you get really big concerns, when the VIX goes up quite a lot, it tends to smash around the smaller caps first. Let's have a look at how big a drop we really got from the Feb 20 to the March 20. As a percentage, this thing dropped off about 43%. So when you play in the small cap game, just remember they bash this market, but when it comes back, the reward is glorious as well. So you've got to really look for that turnaround story. Also look at other pullbacks that have occurred. Take a look at this one. This is 18. It went down 27% and then started recovering. So this is a market where the smaller caps really do get belted around. They get hit much harder than the large caps. It makes sense. They're a little bit more speculative. And we are now back at a key support. I mean, this 212, you know, this has been a level that people have bought off this zone quite a few times. We're at a pivotal area here across many indices. When we take a look at the S&P 500 and Nasdaq soon, you'll see what I'm talking about. The weekly 50s around here, non-farm payrolls, 8:30 a.m. on Friday will probably be the big signal or the big factor. And the monthly actually did end up closing underneath the previous point. And this is still trapped on a monthly. I mean, how annoying. The weekly got through and the monthly could not hold up. It's a very frustrating situation, but you're back here at the support. We look for lightning bolts. We look for double bottom patterns. So any kind of pattern, we need turnaround. And hopefully in the last 2 videos, we've really talked about trying not to catch the falling knife. You still can't really catch this unless you're an investor. You're really looking specifically at looking for the turnaround story. We don't have it yet, but we will keep covering it. Let's move over to the Nasdaq, the QQQ. Look, it's a head and shoulder style pattern. A lot of people will call this. I've argued many times that it's very difficult to short the market. So here's the left shoulder, head, right shoulder. But it is certainly weakness coming through. If you took the key here, which is the movement from the head to the neckline, and you then trend line that out with current price momentum, and let's say it fell off a cliff, where is it getting to? Well, it could be going all the way back down to our monstrous trend line that we've had here for some time. So this trend line is a big deal. We've used it several times now to pick the bottoms of markets, and it's been pretty damn good. We are starting to get into this territory where we're talking about, okay, where's the next move to? Is the support going to be found at around 382? Let's have a look at the weekly. What is that on the weekly? Well, it's nothing in particular. It's just previous resistance. But the big one is going to be the 20 moving average. And this is what we always talk about. If the 20 moving average is breached, closed against on the weekly, that has not happened on the Nasdaq ever since the start of the pandemic. Whoop, we go to the 1 week here. We'll bring that up. Look at this. So many 20s. Breached, but not closed. Breached, but not closed. Breached, but not closed. And this has been an incredibly strong index. So if the 20 is broken, the 50 becomes the point. And this is where people will really freak out. At this stage, we've got to remember what's just happened. Put it in perspective. We ran up 16%. We're getting a potential correction here before maybe even a Santa rally. A lot of people are now calling, oh, we're going to crash and everything's bad. I'm not convinced of that. I'm not sure if you guys are convinced of that. Let us know in the comments down below. We're trying to play both sides here. Traders, we don't really care. We follow the price action. The price action currently is showing weakness, but we move here towards the 20. This is where we look for Wall Street to rally that market should it get down there. Let's move over to the US 100 because I think on the 1 hour, this really has been the story for the last couple of days. So we've detailed this for a little bit. We detailed the support. We saw the support happen. It was all futures trade, super annoying. There was actually a full-on stop hunt. That's a very good trade if you were there for that point in the open. Fantastic stop hunt opportunity here off the peaks. Very easy trade to take short for the day if you know what you're doing. Something I talk a lot about in the mentoring. It's a big deal, that one. So it shorts off, it takes out the stops up here, triggers a lot of buys. I haven't modified any of these lines, so this is exactly where we thought the resistance would be. We were looking for a breach of this level so that we could finally go long again. It didn't happen. It broke through, And now what do we expect happening in the next session? Well, we expect it to rally up. It's probably going to rally. It's either going to stop here or here. It's going to rally. It'll put a lot of pressure on this downside support. This is usually what happens. And then it might even come down and retest again. That's the normal scenario. The other scenario is we go straight into the weekly 20 and then we see the rally there. But day traders are going to be all over this. Scalpers are all over this on the smaller time frames. I'm sure a few of you in the comments are doing okay based on being nimble and fast. It is not the time to look at swing trades, at least in my opinion. That's only my opinion. I'm telling you what to do. But from this point, it is a very, very big deal. You know, this support will become resistance and there will be some fighting over that zone. Let's move over to the US 500. Again, another one of these indices that's coming down to a key level of support and resistance. We've got here that 4,500 zone. Just after the 4,500, you have the 20 moving average here on the futures. And if we move to the SPY and we go to the weekly, you'll see it's right there, just so close. So many times it's tried to breach, it failed to do it. Let's have a look at where it's been in the past, how it's done it. This is basically a double dip. This does happen sometimes. You get that movement up, you get that double dip, and then you move back down. You see that time and time again with markets. Sometimes they're a bit more shallow, so the dip just goes bang and then slaps it straight back up. But if we look over on the left-hand side, this is something that does happen. You've got that dip, movement up, dip, movement up, and then of course the rest was history. It did move up after that point. Don't necessarily be scared. It's all about the 20. If the 20 is breached, we start to look towards the 50. And if the 50 is breached, okay, we can all freak out. At that point, we're talking about the potential to go back down to the 200 moving average. We don't really want that. I don't think most people do. Some bears out there, I'm sure a few of you are like, that's right, overpriced market, baby. We go down to the 200. Look, we'll find out. We'll cover it here on the channel and we'll check it as much as we can. If we're thinking about the previous days of trade, we go into the 4 hour here. You'll notice it does rally, but in general, it smashed through this trend line here of the last two lows. Now, if it rallies, it's got work to do. It's going to have to compete with this trend line. Probably some selling comes off that. And we're looking for lightning bolts now. We're looking for the turnaround story. We don't know exactly where it's going to be. The 20 is a good hypothesis, but we don't know that. And we're going to keep following it every single day. Let's move over to FBTC. Actually, just before that, just remember the fib here for the pullback and the central pivot. The central monthly pivot is right on the weekly 20 moving average, which is also the 50% fib pullback of the whole move. This is where Wall Street does like to pick it up. So I just wanted to mention that quickly. We're looking for the turnaround story really around here because the news, as far as I see it, is nothing new. It's more of the same. And as we get more information about this Omicron thing, it's looking at this stage. If you were going to go out of a 10 ratio, I've heard health experts, not me, they're giving it a 5.1 out of 10. So they're going in the middle. They're not necessarily freaking out. They're not necessarily going, oh, it's great. That's where I'll leave it at. That's someone else's opinion, not mine. They're more medical expert than I am in this aspect. So here we go is resistance, potential closeout here for FBTC. This is a big deal. Obviously, Ethereum, we've argued ever since down here, is going to be stronger than Bitcoin. It has been so far. It looks still to be holding up. If we have a look at the ETH chart, it's doing okay. Little bit of reversal here though, so be warned that if you're looking at day trading this, you're really looking for a breach up here to create epic FOMO around that 4,800, because that's a resistance, and a sell-off. It's basically like saying, okay, we've got a shooting star here. This is the point of problems, which we know it is. But if you breach that, oh, wow, it could go all the way to 5,000 very, very quickly. So it's some good charting there for Ethereum. Bitcoin's doing the same thing. We remain here with 60,000 being the real trigger point for a lot of big buys, and it's consolidating at this point. It's been the much stronger market. There's so much going on in these markets right now. I know these are long videos, hopefully getting some value from it. Let us know in the comments down below if you're enjoying the longer format where we're covering everything. We always change it up depending on how much information is out there at the time. If you enjoyed the video, please subscribe, smash that like button, guys, and we'll see you in the next one. Bye for now.